Hello, everyone, and welcome to our new Growth Spotlight episode. Today, we have a very valuable guest. David is with us today. David, I want to leave the floor to you for your own introduction because I've got lots of questions waiting for you. But first of all, thanks so much for
Thanks,
coming.
Aaron. My pleasure to be here. Let me kick off with a brief introduction. As you can probably tell from my accent, I'm not originally from the UK. I am originally from Ukraine, from Kiev. I studied at University of Manchester. Did my finance and economics degree, after which I joined Bloomberg, which then it was a cutting edge, a brand new department of all things data, which was a revolutionary idea. Those of you familiar with Bloomberg terminals, separating data feeds from the terminals. I was a part of a mix of product sales and even a little bit of R&D, which was a fantastic experience. I then left and went back to Ukraine for a little while to set up a company. I guess it was a consultancy in a way to support Ukrainian companies, SMEs, wanting to do things in the UK. That's probably the best way of putting it. Ukraine joined free trade agreement. UK was still a part of the EU. So there was a lot of opportunities opening up. We grew the company to about 12, 14 people strong, covering all sorts of sectors. But one sector stood out in particular, which I did not know then, startups, technology. This was just this weird IT companies emerging from Ukraine, which set me down on the path of venture capital. I sold my previous company and launched Blue Lake VC with the goal of doing something. At that point, I was still very fresh, very new. Like, oh, I need to be more involved with that particular segment. And since then, we launched Blue Lake VC, expanded our thesis beyond Ukrainian startups, and we are now investors in early stage technology founders coming to the UK from all over the world to build the next big thing. And in some of them, we have an opportunity to invest in and join on their journey.
Today, my goal is touch basing two areas, David. One of them is related with your investor hat, especially with the AI era. Lots of things are changing. That's why I've got questions under this. And also the second chapter is becoming an immigrant founder trying to enter the UK market and the challenges that the founders are facing and any help or any tips that we can give here. Let's start with the AI topic. It's crazy times, right? It's crazy times. What we are witnessing is, I don't know, it's like bigger than industrial revolution or something. And yeah, there are lots of angles. That's why I will try to make my questions in a concrete way. First of all, is it becoming harder or easier with the AI to fundraise in the pre-seed and seed?
This is an interesting question. AI certainly has its hype component. There is no getting away with it. And like with any hype components, there are a number of founders that are very good at marketing. They're very good at positioning. And it is certainly easier for them because there is a certain percentage of investors now who are experience a very keen sense of FOMO and they want to be participating in the AI. And we are seeing it in our own deal flow where all of a sudden, almost every single company is AI. And do I blame the founders to trying to position themselves? No, I don't. And this is where the market is. So for a certain percentage, I am not going to say it's a huge percentage. And by the way, I am focusing on early stage and genuinely early stage, not as we've seen recently, over £1 billion valuation and tens of millions being raised at the seed stage. It is a tale of two cities. If you can place yourself squarely in that AI train, AI hype, then it becomes easier. However, if you are the rest, you now have to answer the question, which previously was, what if Google will start doing what you are doing? This was the question that founders were facing for the past 7-10 years. And now it's got even worse. With AI being so ubiquitous and it's being so at this stage outside of coding, where the gains are very concrete, they're quite specific, they're measurable. The rest is, well, AI may happen tomorrow, may happen in a year, perhaps may not happen. But it becomes, what if Anthropic, what if Claude will do what you guys are doing tomorrow? And this question is a very frustrating one because it is hard to address. It's hard to wrap your hands around. And for those founders, life became much more difficult because they are in competition with this invisible force, which is real, which may squash them out of nowhere. And it's very hard to define a particularly good answer to address that. Some founders, especially those that are coming from uh, big names companies, your ex-Anthropics, your ex-OpenAIs, Googles, etc., they are finding fundraising as a breathe when they are on their train, where the rest of the market, the money is there, but they're wrestling with those questions, which in some cases, I would say they're quite unfair. And yet there they are, and you need to kind of fight that shadow or a monster that doesn't exist yet, but maybe just around the corner. And it could be very, very frustrating experience.
Totally agree. And yeah, most of the questions today I'm going to ask, most probably we don't have an exact answer, but the goal is to get your take on it because you have got both like investor hat at the same time you are
Yes.
working with the international founders who is facing these challenges. As you just told, investor side is witnessing that FOMO behavior. At the same time, they are trying to find out some trust elements. Then they are looking, okay, they are ex-Anthropic employees, ex-Google employees. These guys can do something and try to throw the money on it because that is the gameplay. You need to find the next lovables, next like exponential growth companies, and you need to like invest in the early stage. But at the same time, when it comes to startups' daily life, AI is affecting in two ways. What I see is one way is increasing the efficiency, especially
Yeah.
now the coding, software development, marketing. Now we can have like 3-5 people teams who can go to unicorn path. It was impossible a couple of years ago. But at the same time, as you just highlighted, because of AI and especially big LLM models, you need to be daily basis thinking and talking about the defensibility because I'm sure that investors are questioning that defensibility, but it's becoming very sensitive because AI is making you efficient. AI is making you to develop your product in an efficient and more effective way. But at the same time, AI is the reason that you need to tell your investors, potential investors, that tomorrow Claude will not have a new feature that will kill you for good. What about in terms of the ask, the amount, and the allocation of funds? I'm asking both the startup side, how they position that, as well as the investor side, because in back old days, normally it was like when you are raising, especially in the early stage, most of the funds were going to the product development. But now, does it changing? Does it more going towards distribution, or is it just my theory?
Yeah. So you are absolutely right that what we have seen is, and this is a very real difference, which is immediate, which we stopped seeing we need funding in order to pay our offshore development team. That's almost gone. There is a new line on the P&L, which is we are for tokens, or we are paying for the compute, we are paying for cloud. And at early stages, it feels that this amount is lower at this stage.
Mm-hmm.
So the graph I'm seeing is people get to do much more with the lower tickets. And this is the world where we live in, where the ticket sizes or round sizes could be between K and 1 million, which puts us in the pre-seed, maybe early seed category. And you get to see people doing wonderful things with that amount of money. However, what we are seeing is once they hit that Series A and they do have the clients and the client demands become larger and larger, either they start to rethink their business model or they are now subsidizing, well, not subsidizing, they're paying for the services of the big boys in order to pay for those tokens. And that model becomes a little bit vulnerable. This reminds me of the good or bad old days of the SaaS model where you would bet so much
Uh-huh.
on the ads on Meta or Google, and then those ads, the price would go up, and all of a sudden your economics, the client acquisition has disappeared. So I'm really excited about that people get to do so much. And I think one of the elements which is huge, the cost of experimentation of early stages has gone down. And I have been involved in
Exactly.
very uncomfortable conversations in the past where you have a startup and their development partners typically offshore. And all of a sudden the bill goes, twice, 3 times more than expected because, well, you guys change your requirements 3 times and it becomes a whole thing. Is it gone entirely? A lot chunk of it has disappeared because you can experiment so much. So I see now that the rounds haven't changed, the amounts haven't changed, but at the expectations of what
Hmm.
can be done, they change and they are being met. Right now, there's very little reason if at a pre-seed level you just have an idea stage and you don't have some sort of MVP. There is no
Exactly.
reason for that. I'm personally excited about that. I think that makes founders' job much easier when they can build something, they get a feel for it, they get it in front of the clients. Later stages, the economics, they become very, very tricky. And I think we're gonna see things swapping as the bigger boys, especially those that are pre-IPO, and then their own economics will have to come into play and how they will push it down the line with the costs of the tokens, the cost of the subscription models, the cost per usage, which I feel like inevitably will creep in. And then we'll start seeing that perhaps it's not so cheap. I heard a joke. Well, it was a semi joke from a startup. I don't know if they were serious or not. And you're saying that they have this new model where they hire a junior person in order to check code so they don't have to use
Hmm.
that many tokens. I was like, guys, you guys are brilliant. They, I've tried before where
Oh
you
my
hire
God.
somebody junior and quite cheap to do the development. But yeah, that's where we are at the moment.
The thing is, because of these big boys raising the biggest rounds and spending money that with that pace, the economics is not right because they are not making any profit. They are not even close for it. What's your take on that? How will the market will be
Yeah.
coming
So
together?
it's a difficult one because there is also another element which is clearly very linked at every level. Even if you are, let's say, you're at open models, there is energy prices and energy
Exactly.
crisis and the energy policy, which at least on European side there seems to be a lot of awareness, but not enough speed. And what happens, I'm not the doom and gloom, but what happens when you have data centers competing with some vital energy needs? The prices at some point will have to start to creep up. There is of course an economies of scale at play, but
Hmm.
there is this bedrock of energy costs where we just can't get away from energy cost, water, other essential elements. And maybe that's not a bad thing. Maybe the push for
Hmm.
efficiency, and we've seen it already. And I'm by no means, I'm not pretending to be a deep AI specialist, but at least at the commercial level, I understand economics. I'm not going to pretend that I have the entire understanding
Hmm.
of all the technical stuff. But we see the difference between Chinese and US models. And one of the reasons why Chinese models tend to
Hmm.
be more efficient is because they have to. And where you have US, where there is this inherent abundance of energy, building large, there is an incentive of going big, of becoming in a way too big to fail. All of it creates this sense of abundance for startups. We sort of lost that old school efficient coding, using minimal resources. And this will come back and this will clear, regretfully for many founders, will clear a lot of startups that are been, throwing in AIs with abundance without thinking of the economics. But the economics it's almost, if you are not a successful founder and you haven't found your market fit, who cares? You're never going to face that problem. But once you are growing large, once you hit that exponential curve you're looking for, all of a sudden the good old economics will start to come to play. And then you will have to raise your prices, run things more efficiently, start cutting down on the number of features. I feel almost comfortable about it because this brings us back to the good old fashioned economics and supply and demand and the value and the cost of goods provided, all that good stuff. We're probably going to see some level of not even pullback, but price increase. But perhaps that's not a bad thing because
Hmm.
do we need to have AI in every toothbrush or a toilet seat? Perhaps not.
We don't. We don't. I'm 100% with you, and this is a very interesting topic because, as you said, fundamentals of economics is still here. Unit economics is still the core. Yeah, how big boys are playing the game is different. I totally agree. Because of the abundance of the money for them, resources for them, is creating an inefficiency that is directly affecting all the startups in all over the world. If you price your SaaS with X amount, grow exponentially, but when the real costs hit, if you need to make it 3x, will there be a market for you? What I believe the same with you. Even if you're an AI founder, starting from day one, caring
Yeah,
about unit economics and making it as a core of your business model, whatever happens, okay, I don't want to say be very conservative. No, try to be in that ship. But as you just told, think the later stages. Think, what if I have next users? What will be my cost mechanism? Even they can make some risk management scenarios. They can say, okay, my token pricing is that. What if token price will be 5x? 90% of things what's happening now motivates me, but at the same time, I'm being more cautious about it.
100%. And we have all this advice for founders, but even the big boys, last week, a week before, when they with the OpenAI and releasing their figures, and these are internal figures, so who knows what the truth is. And then the
Yeah.
Oracle taking a hit because they put so many of their eggs in their OpenAI basket. These are as
Yeah.
big boys, as responsible as you can imagine. Hey, maybe that bet will still pan out. But what do we expect of poor founders where the big boys are behaving like they in a, and they're like, okay, we're putting
Exactly.
everything on black and
Exactly.
let's see where the chips.
Maybe just be, they can be a little bit more cautious, let's say, for the
But
future.
I have a lot of sympathy for the founders. What I find
Yeah.
frustrating is so look, let me put it out there. AI is a wonderful tech. It's real, it's happening. But I get a sense sometimes there's this
Exactly.
magical thinking that don't worry about anything. We're going to insert AI here and here. And the next good thing, it's all,
Everything solved.
I'm like, well, let's talk the boring part. Let's talk client. Let's talk about their
Yeah.
budgets. Let's talk these things. And too often I see now that the founders, they get swept in the excitement, in the opportunity, and they skip on the boring parts. I love boring parts.
The boring part where the magic happens, because there are lots of shortcuts. Even in the marketing now, you can have a shortcut by getting your all go-to-market strategy from LLM. It's a shortcut, but don't forget, millions of people are doing the same. If you go to the long way, hard way, if you work on branding, if you work on your positioning, if you spend time, David, even thinking, because what I'm seeing is, because of LLMs, people are trying to outsource the
Yes.
thinking as well. That you cannot outsource your thinking to an LLM, because it will hallucinate. It will give you fluff. It will say you, oh, great job. But at the same time, you're going to spend like several hours without a
I
genuine
think that
output.
the challenge that we all have is that LLMs, they are fantastically efficient and effective at the coding space. But coding space is very, very specific. It's
Mhm.
very structured. It's almost by definition, it's so well matched for the
Exactly.
for these models. And then we take this, not hide this effect, and we extend it to every other area where we have to be so much more cautious. I think
Exactly.
it's hard for people to separate those two things, but yeah, we have to.
No, great take. Another follow-up questions about AI and startups is hearing lots of words like AI native, AI enabled. As an investor, when a startup comes, also we have got a new segment,
Yeah.
vibe coded platforms. It's like let's say vibe coded platforms. For me, these are MVPs. I cannot see in a 2 days a platform that can be sold to anyone. I'm not talking about the B2C, but in the more B2B enterprise level products, let's say. The startups or products have been in the market for several years, and they are putting AI inside it. And startups, they born
Mhm.
within the AI. How is it changing? What's your takes on these definitions? Are these definitions are true, or do we need them? And how investors are approaching the pitch decks now?
This is an interesting question and one I'm thinking a lot about. So I think this also depends on investor. So a couple of weeks back, I had a pleasure of hosting fireside chat with John Spindler from Twin Path Ventures. They are AI guys, AI through and through, and their thinking is a lot about AI native, and they have a very clear definition. For them, there is a very small percentage of startups that fits. We are generalist investors, and the challenge which I'm seeing is a lot of startups that are trying to squeeze themselves into that AI native category because that's where a lot of money is. That's where a lot of hype is. Our approach is we are always looking at the problem first. And this is the way we are doing our investments. We're looking at the problem, and then we're looking how well is your product fit to solve this particular problem. With the AI being such a flexible, ubiquitous technology, now more than ever, that tech is likely to be a good solution. And for us, we don't care that much if you are AI first or not. However, where this does come into play is where you have startups or founders who've been solving a problem in a certain way, and now they're just slapping on AI because they want to be more palatable for investors. And this is where I have a problem. This is where, okay, this is not serving you. This is not serving your clients. You're trying, and I get it, this is a marketing exercise. So the way we see AI is are you solving, is this is the best technology to solve a given problem? I don't take the position that it's a default technology. Whatever happens, it is the best. Sometimes a simple regression just will do the job. Sometimes a rules-based analysis will do the job. Sometimes you don't need any analysis if you have a particular business or business model. So for us, it's an exercise is not in noise. That's the reality, is because we are seeing so many founders, almost not all, but there's a significant percentage of them claiming to be AI native. And here our problem is, hold on, but what is the problem that we're solving here? What is exactly the client? And sometimes it feels like you're speaking to a magician and you're getting bamboozled by all the cool stuff. So when I see AI native without how you are solving a problem, I'm becoming suspicious. I'm like, okay, I remember that story back in the day when somebody tried to sell me trees on blockchain, like a physical tree, you know. But it has to be on a blockchain, and I couldn't for life of me understand why. But so
Oh my God, that's hilarious.
for us as a general, so I think we have to categorize it. If you are a specialist AI fund, then AI native is probably going to mean for you somebody who is deep solving a specific issue. In Europe, it's unlikely to be a LLM, but it may be some other niche issue that is genuinely AI first. We have invested in a company, for example, called Sagittal, which is solving an issue of different communication channels that have that developers are using, and they have their AI platform essentially consolidating all of that. That made sense to us. But when I was speaking to Mike from Sagittal, I didn't start the conversation from tell me how AI native you are. I started the conversation with tell me about the frustrations that your clients are facing. And right now it feels like it too often for founders, it's an opportunity to cloud kind of things up and try to drive up the valuations. Not for all of them, but when I see AI native without the problem, it's like my spider senses are going off. I was like, I remember that tree.
Makes perfect sense because I can understand the founder's reflex as well, because now the hype is AI, and especially when you are in early stage, you are trying to raise funds, and when you see that the investors are putting money on the AI, the thing that you just told should be a very important, I think, reminder for the founders. Investors, most of them, are still looking for, again, the fundamentals, like it is the problem and how you solve it. What's the market? What's your unit economics? Yes, if when you are telling everything, if an AI element is making you efficient or effective, and if that makes your business model more scalable or more like revenue generation potential, then investor will be looking the AI is a good thing. Was a great confirmation as well, because this is the reflex that I see
I
in
think
most of the founders.
there is a small category. So look, there are investors, so you call them deep tech or university funds. There are a sliver of investors who are genuinely investing in cutting edge tech without having those clients in
Mm-hmm.
place. However, if you are going after those
Mm-hmm.
investors, you better be kind of a noble type of style. You have to be genuinely a leader in the cutting edge stuff. And there should be like maybe 5 of you in the world doing that thing. You can't be sitting kind
Exactly.
of on both chairs. If you are going after those investors, and there are a few of those, not that many, but there are, then you better be like one of very few people who understands what you are doing and being genuinely on a cutting edge of some technology, which may not have clients yet, may not have unit economics, but there are not that many physically, there are not many founders who are quite there yet. We personally, that's outside of our scope, but I just wanted to there for the sake of
Mm-hmm.
completeness.
No, I think it makes sense because these are type of deep tech startups, and the market is number of investors are not big, but
No.
also the number of startups and the talents are not big as well. Yeah, it can be the checks are big because the bet is big there. The bet is finding something that is very big, but also the risk is big as well because that can be stayed only in the R&D phases and never commercialized. That's why all the dynamics of these ones I can understand is totally different. Okay, I'm conscious about time. I also have one last concept that I would like to take your insights is the immigrant founders. David, you have been working with immigrant founders. You started in Kiev. You started to helping them for UK market entry. Then you switched to the investor part, and you started to like helping them. You are still helping as Blue Lake VC with lots of initiatives for all the immigrant founders. That's why I can imagine that you have immigrant founders from all over the world around you. When you think about the challenge or challenges, what is the common one? Like with that founder from Turkey, the founder from Ukraine, and founder from, let's say, South Africa. Is there a common challenge that they are facing when they're
There is.
entering the UK market?
So outside of very, very small percentage of founders who at the top of their field. So if you are an exited hundreds millions founder from Turkey, South Africa, or Ukraine, or you're going to be fine. But if you are hardworking, talented, bright founder, but you don't have that massive kind of tailwind network. So we've been asking founders that question for the past 5 years. What is your greatest challenge? And the greatest challenge, I believe, is across everywhere, but in the UK in particular, is that initial network. And don't get me wrong, when you arrive to the UK, it's not difficult to make friends. There are plenty of events. There's many things around. The challenge becomes, I don't know how to speak about this without sounding cynical. All people are equal. We all are. But when you are in business, there are layers. And it's very easy to enter that first layer where you are going to be meeting people who more often than not are trying to sell something to you. You're going to be, it's the easiest thing in the world in the UK for an international founder to build a network from consultants.
Yeah, been there several
But
times,
once
been
you are
there.
starting
Yeah.
to thinking, okay, I'm looking to build a network of investors and clients. And this is where you realize that there are bubbles. And getting through that bubble is difficult. It's truly, truly difficult. What makes it even more difficult, and nobody is bad. Nobody is going to be telling you, oh, well, you are from Turkey, therefore I don't want to meet you. You're going to find that everything is a little bit slippery. It's like trying to hug a shadow, and you'll realize that you're trying to get to an event, and you get a very super polite email saying that this year it's full, but next year certainly maybe, but probably not. So don't even try. And I think that's the main challenge of building that network that then opens up doors to capital, opens up doors to trusted partners, opens up doors to clients, which is something we've been working on building our network oasis to address particularly that question. But if it's single one issue, that will be the network.
No, it's crystal clear. And yeah, for the ones who are listening, us, Oasis is an initiative of Blue Lake VC that you can network with other international founders as well as investors. It's my 10th year in the UK, David, and I've been all of these phases step by step. Exactly, I can echo that 100%. And also, there's a misconception of networking in the UK is very easy. But if you are going to this first layer, yeah, it's very easy. Like you can go and you can book something in Eventbrite, and you can go and you can meet with several people that tries to tell you something. But when it comes to like knowing the relevant people, it takes time. And also, yeah, I can also relate that here it's not like in the
Yeah.
States. In the States, when you have a no, you have a no. It's a no. But here, you have a no in several ways. And depending on your experience in the UK, you can understand the no. For example, just this week, I've received an email, was ending that let's touch base at the end of this year for the next year because we are it's a no. If it was the first year Iran
Yeah.
coming from Turkey, I was say,
Yeah.
okay, next year,
Exciting.
let's put it pipeline. That's why for founders who are spending time in the UK, these kind of cultural dynamics takes time, but try to meet as much international founders as possible, the ones who are having these challenges, because this peer effect is very important. And Oasis and the Blue Lake VC is one of the best places that I can recommend. Thank you so much for coming, and thank you so much for your insights. Any closing remarks?
I think by the nature of our conversation, we are focusing on things that are challenging because they are sort of easy to define and they are often of the most pressing interest. But for founders listening, I want to encourage you to go forward. If you're considering coming to the UK, do so. All these challenges, they are real, but you can get over them. There are plenty of instruments. Yes, it takes hard work, but if you're a founder, you already signed up for hard work. And it's a fantastic place to build, to expand, to go to the next level, to expand to other international markets. So I want to end on a positive note. It's a great time to be alive. It's a great time to be a founder. This is the time where plenty of uncertainty, which is great for early stage founders because this is the time when the next big things are going to be born. So it's great time to be alive. I want to close in with a kind of positive sentiment.
Exactly. Both David and I, we are realistic people. That's why we were talking the challenges, but yeah, at the end of today, you describe it perfectly. Founder is signing up a role that is challenging. That is the most of the time journey itself is the most important thing, not the destination, because we have seen lots of examples. Founders sold their companies, exited, but become unhappy after that, because it is the journey. Enjoy that journey because this journey is challenging. I think at the same time it is rewarding. If you listen till now and if you find it relevant, share with another founder. Maybe we can also give some ideas to other founders as well. David, thanks so much. Again, it was a
Thank you.
pleasure to host you.